that no organization, whether NGO, whether non-NGO, can survive without finance. It is important that we understand the role of the finance and accounts department in any organization, and BASSCOMM is no exception. So basically, I will take you through what is expected from someone who works in the department called Finance and Accounts Department. We'll look at the functions of the department, the guidelines of the department. So let's start with the function of the department first. First, we have financial record keeping and cash management. When you hear financial record keeping, it does not necessarily mean money alone. That means all documents to finance. A contract document is also a financial document. You understand? An agreement between BASSCOMM and a client that has to do with monetary value is also a financial document. So all these documents are meant to sit, the original documents, are meant to sit in the finance office. The function also includes project financing, sourcing for funds, and budget. So it is our responsibility to finance all BASSCOMM projects. You will also agree with me that even the staff evaluation, which includes financials, is also the duty of the finance department to also finance those aspects of the business. So we have the administrative and we have the project aspects of the business. So these two aspects are also being taken care of by the finance department. Then there's something we call accounts payable and accounts receivables. Accounts payables are the people in finance that deal with the amount being owned by the company. That is the people the company is owing money, whoever that has worked for us. So the people in charge of that are payable, while receivables are money that the company has worked for. That is our outstanding invoices. BB reporting. There are also different types of reporting. There are some we call management reporting. There are some we call statutory reporting. Statutory has to do with our government. These are compulsory reports that we must provide, while management reporting are internal. So statutory is more outside. Whatever documents you're putting in your statutory, it has to be something that has been sent by someone internal that is approved okay, that can go out, because that can put the company in trouble if those documents are not properly guided and the facts are not well presented. We also have monitoring and interpreting cash flow. There's something we call cash flow in accounting, which has to do with the in and outflow of funds. So that monitoring and interpreting it is a cardinal function of the finance department. Then we have asset and liability. I'm sure you are familiar with that. Can you tell me the difference between asset and liability? Assets are things you own. You understand? That is your own. That has value. That can also generate income for you and appreciate over a given period of time. Example of assets, even the money in your bank account is also an asset. Real estate, investments, vehicles, equipment. Then, like I said, receivables also. The money that people are owing us in the aspect of finance, that receivable is also an asset to us. Remember, I said receivable is what? Hello?
Yeah, please, can you come again?
I said receivable is what?
Receivables are
money
things that are
owned to you. That is the money people
that are coming
in the
into the company. Yeah.
Do you understand? While liability is the opposite, what you are owing other people, your debts, your financial obligations, the loan you borrow. Do you understand? The taxes. So where you want to determine your net worth is going to be total assets minus total liability. Do you get it? So the management of this old stuff, the asset and liability, is a function of the finance department. Are you with me? Not
Yes,
only
I
that,
am.
we also have regulatory affairs. Those ones involves tax management, auditing, insurance, and the likes. So these are functions of the department. All these that I've said are things that the department cater for. So, like I said, how much, whatever we are selling, the total we aggregate and we call it sales. What we are spending is expenses, or you call it expenditure. You understand? So the net worth of the business at a given period is called equity. So when it now comes to payment in finance, like we are saying, it involves dispensation of cash. Disbursements of cash rather. When you disburse cash, it also functions of the department. So there are guidelines, there are principles in which you must follow before you can make this payment. And one of them is approval. As a finance person, you must make sure that before you make any payment, that payment must have gone through approval. That payment must have been approved either by PMO or top executive management. You understand what I'm saying? Then we have terms and conditions. You must check to be sure that the terms and condition aligns with the payments you are making. For instance, if you're supposed to pay 30%, you must make sure that it is 30% you are paying. You're not paying 100% as your first payment. If it is supposed to be 50%, you are not paying less than that amount. Even if sometimes you even pay less than, it might still be okay, but you don't pay above. So you also have your records. You have to check, has this payment been made before? What does the contract sales? You understand? Then you have control documents. You have cash flow. This will determine how much you can pay at a given period. For the fact that there's an approval for a certain amount of money, you still have to check your cash flow to see if your cash flow can accommodate to pay such amount of money at that given period. Otherwise, you might ask them to see how you can renegotiate the payment terms so that it can fit in through your cash flow. Then communication. Once payment is made, you need to communicate to whoever that is recipient of the payment, including whoever that has approved such payments. Then posting upon successful payment, you have to ensure that such payment is posted to the accounting software. In finance, we use QuickBook accounting. There are times where we use Sage 50 as well. So these are software we use in finance. So you must make sure that these payments are being posted immediately after the payment is made. Is that clear?
Yes, sir.
Okay. So this takes into project financing. Like we know that project financing is a cardinal function of the account and finance department. And there are things we must consider when financing a project. As an individual, can you tell me things you should consider when you want to finance a project? Let's talk on your own level. What are the things you feel you should consider when you
You have to consider resources. You have to consider manpower. You have to consider personal availability too, if you are going to be available for the project or not. And you have to put time into consideration as well.
I said all that you've said is categorized like under two things: resources. Manpower is still under resources. Do you understand? So, but first, from our own point of view, we have to look at the contract sum. How much is involved? How much are we going to be making? You understand? How much do we need to spend? That's the first thing you have to supposed to do. Because you have to look at your capacity and you have to consider in any business talks, you have to see what is the contract value. How much are we talking about? Then the next one is you also have to consider the duration. For how long are we going to be on that project? How long it's going to take us to complete the project? What's the project timeline? Then you also have to consider the payment terms. How are they paying us? Are they going to pay us upfront? Are they going to pay us upon successful delivery? Are they going to pay us on milestones? After considering these first three things, then you need to now look at, okay, how much are we even going to make at the end of the day? If I have to spend 3 months on this project with my money I'm putting down, how much am I going to be making at the end of the day? I'm sure you must have done your P&L when you got this offer with BASSCOMM, right?
I'm still on it, sir.
You are still on your P&L.
Yes, sir.
Do you know what I meant by P&L?
Project management, sir.
No, your profit and loss. Like, okay, oh, BASSCOMM wants to pay me 50,000. BASSCOMM
I
wants to
thought
pay
you
me
said
30,000. No,
P and M. Sorry,
no, I
sir.
said P&L, profit and loss. Like, how much you've already done that, I'm sure, before you even accept this offer.
Yes, I did.
So that's the way it works. So in finance, we have to check all of these before we can decide if we are going to be sponsoring a project or not, if you are going to be embarking on that project or not. You have to check your profits. Like I said, you have to check the duration. That's the timeline. How long it's going to cost you? How long are you going to be on that project? Then you also have to consider, after determining your profit, you also have to consider the client's history. This client, is it someone that if we work with this client that has a bad reputation of payment, like their reputation is not good? The reputation is so bad when it comes to paying their vendor. So you have to think twice. Like, do I really want to work for this client with advance payment? Do I want to do a 100% payment upfront? So the client's payment history will determine this. So these are major things. There are other things to consider, but as far as we're concerned in finance, these are the major things that we look out for: the contract sum, the duration, the payment terms, the profit, and the client history. Because you don't want to work for somebody that's, for you to get your money, you have to go to court. Then, how do we source for funds to finance our projects? Like I mentioned earlier, advance payment from clients is one way, and this is what we love most. Clients pay you advance payments, you use that money to finance the project. When you're done, they pay you balance. So sweet. Then we also have the cash in the system. That's you finance the project through your cash flow. That is through the money you have in your reserve, through your in and outs. You understand? Then supplier credits. You could also get credit from the suppliers to supply the materials while the clients pay you after successful delivery of the project. Then you can also get loan from the directors that owns the company, the owner of the company can also bring in more money to finance the project. And after that, you can pay them back. Then lastly, we have a bank loan. So there are also bank loan. In some cases, you might also get grants depending on the kind of project you want to embark on. So these are sources of our funds as far as BASSCOMM is concerned. Do you have any question?
No,
Mary?
sir, I don't.
Okay.
Sam with you.
Okay, we also have a mode of transfer. There are things you need to consider before you can effectively transfer funds, especially when it has to do with outside the country, like you're transferring outside Nigeria, you're buying things from abroad. So you that you're transferring, that is, the company must have a domiciliary account. You must have the beneficiary details, which include the source code, the SWIFT code, the BIC, the bank name, the bank address. You must also state the purpose of the payment. You must ensure that your purpose of payment is non-vague, that this is clear enough and it's in simple terms. Then you have to either send a letter or fill the transfer instruction form, depending on the the bank you're dealing with or the channel you want to use. Then you must make sure that the fund is in your account. Then after transferring, you must get the text copy and send to the recipient so that whoever the recipient is can confirm receipt of payment. So with that, and you have a confirmation that payment has been received, this will means you have successfully transferred the payments to the person you intend to send it to. Then, when it comes to different banks that we bank with in Nigeria, we bank with Fidelity Bank, GTB Bank, Zenith Bank, Access Bank. But let me say we bank with all the banks in Nigeria and we have accounts with them. You want to ask me, why do we have accounts with all the banks in Nigeria, right? Or you feel it is important that we should have accounts with all the banks in Nigeria?
I feel as a big business is necessary
Why?
because different banks have their different terms and conditions.
Okay.
And we're in Nigeria. Everybody knows bank issues here and there. So
Okay. And because our business also involves that we render services to bank. So imagine we have Stanbic as our client. Stanbic will not pay your money into GTB. So you have to have an account with them. You work with Zenith Bank. Zenith Bank will not pay to another bank. They want the money to sit in Zenith Bank. So in addition to what you've said, it's also the reason why we have accounts with most of the bank in Nigeria. So there are charter guiding the finance department when it comes to their service. So you might want to call it code of conduct, which is payments must be made within 48 hours after request based on availability of funds. In BASSCOMM, we assume that we have earned the money the moment the job is completed and our invoice is submitted. We do not wait until client pays before we record it as we have it recorded as earned. It is recorded as earned the moment the job is completed. Post-dated check is not allowed. We do not write post-dated check for anyone except the top management has given us approval. That is the only basis why you can write post-dated check. Do you know what post-dated check is?
no, sir, I don't.
Okay. Post-dated check is a check you write in anticipation of an inflow into your account. That is, you do not put today's date. You date it to when you are expecting inflows. For instance, somebody is supposed to pay you 10 million naira by 15th of this month. And as of today, you're giving somebody a check to withdraw money in your account for 20th. You know, such person cannot present the check at the moment because it is not yet time. You understand? That is what we call post-dated check. Then we also have what we call due check. This is when you write a check and you know fully that there's no money in your account. It's actually an offense. It's a criminal offense to write a check knowing fully that there's no money in your account. So such acts of such behavior is not acceptable in bank. No finance officer must write a check without confirming the balance in the account first. So that is it. Basically, that is all that is needed as far as this induction is concerned. So we also have what we call debt collection, which has to do with getting our payments from our clients. So we get our payment through submitting our invoicing through valuation. Valuation refers to the process of determining the present worth of projects or value of such projects. You understand what I'm saying? For instance, if a contract is a milestone, so you have to do valuation for every milestone for you to get your payment. After that has been agreed, then you now issue out your invoice for payment. And your invoice is supposed to contain the amount, the contract number or the PO number, the value, the account number. In a case where the client is supposed to pay VAT, you're supposed to include VAT and put our own address, the client's address, the bank details, amount due. You put it on the invoice. Then you begin to expect your payment. So basically, these are processes or ways in which we collect our money from our clients in our BASSCOMM. So then there are four primary statements in any financial report, which are statements of profit and loss, statements of financial position, that's balance sheets, statements of cash flow, and statements of equity. Then, as a finance person, there are reports that should be sent on a weekly basis, why some are monthly, why some are annually. So yearly, the statements are like our audited account statements. Weekly, our payment schedule. Income statements is monthly, that's P&L. Statutory reports, that's monthly. Budget cost sheet, this is supposed to be like everyday things. As a project person, as a PMO rep, you need to always update your budget cost sheet. Then cash flow is monthly. Invoicing updates is weekly. Credit records is weekly, while bank balances is daily, because you have to continually check your bank balances to be sure that whenever you want to make payments, you are sure of what is in your account. I think this will come to the end of the induction for the finance department. Let me know if you require clarification or you have a question to ask. Thank you.